terms of things happening today in markets, let's talk about it. Let's look at what is coming down the pipeline. Forex Factory, we have CB, consumer confidence. I actually really love these sort of statistics. Confidence, consumer confidence, and PMIs. Some people love them, some people hate them. The reason I really like things like consumer confidence and PMIs is because they're kind of forward-looking surveys. When you're talking about consumer confidence, the cool thing about this is that if the consumer is kind of signaling that they're feeling better about their personal finances, like if they plan to travel, if they plan to, buy a second car, buy a second house, buy a first house. If consumers are feeling a little bit better, that's really good news for the economy. Because remember, spending is what spurs the economy, what kind of strengthens the economy. And a lack of spending, which often is coincided with weak consumer confidence survey results, is not so good for the economy. So we're entering into this very interesting period where for many months, it was all about the inflation statistics. It was all about whether the inflation, CPI, the core CPI, PCE numbers, whether or not they were properly coming down due to the Fed raising their interest rates, right? Fed raised their interest rates, caused the bond market to crash, caused the stock market to have a big sell-off in 2022. And now the question is, now that the Fed has seen inflation coming down, now that we're seeing the effects of those interest rate hikes take place, and we've got this inflation story where inflation is actually coming down now, that's good news. But what you don't want to see come with that would be economic despair or a recession, right? You don't need no editing, Nick? That's very sweet of you. Thank you very much. You're naturally very active. Thank you. What's the take profit for gold longs? I don't use take profits personally. Sometimes people will confuse my chart tool here for a take profit level that I have. This is not a take profit order for me. This is just, and by the way, let me do this because I keep forgetting to do it. I need to trail my stop on GLD. So I am 0.47 from my entry is where my stop was supposed to be. So my stop loss 0.47 should be right here, 222.758, 222.758. We got it. Okay. Oh, I can't believe I hadn't done that already. That was just irresponsible of me. I trailed my stop, or I intended to trail my stop, but then forgot to actually do it on this account. So had gold just completely crashed, I could have taken too much of a loss. I trimmed my stop loss on gold. So here's where I'm at with gold. So I don't use take profit orders. I only use, the only way on an execution basis that I will get out of this gold trade, I will 100% have my stop order triggered. That's how I will get out of this trade. And it may be for a win, it may be for a loss. So I'll give you an example. Let's say that gold rounds out and we see gold prices start to head north again. Let's say we break through the highs, we get a nice breakout, clean break. Then what I'll do is I will take this stop loss where it currently is and I'll move it up to, just below that higher low. You might say, well, Nick, what if it comes all the way down and stops you out now? Then it would be unfortunate, but it would be okay because that's what my rules tell me to do. I wait for a key break of structure or a higher low to form in order to trail my stop loss. I haven't really gotten a higher low. And so if this market crashes down, I want to give it the chance to, trade sideways if it needs to. But the only signal that tells me, Nick, you need to get out of this trade is if we break support. So we have support here. I know I'm trading GLD, which is the gold ETF, but it is the same thing as just trading gold spot price, which XAUUSD is gold spot. So if you're watching gold with me, basically the idea here is that I'm okay with price coming down. Like, I am long unless we break this low. If we break this low, we get something like this, then yeah, I need to get out of the trade.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Let's do a funk sound for the trailing take profit. I can't do it. I can't do it because, I love that sound effect, don't get me wrong, but we can't overuse that sound effect. I'll give you a vibey one today. I'll give you a vibey sound effect, but the funk sound effect is reserved for special moments only. If you've not heard the funk sound effect, and it's not funk with an F, it is PH, funk. I think that's how we say it. We had the audience fact check me on that. I think it's funk, like Philippines funk. But anyways, so stock market opens up in 2 minutes. We'll see where this market wants to go. About flat on the morning here. The Russell's giving back a little bit of gains. I am long IWM, and I would not mind. I mean, it's weird. I'm bullish on the stock market, but I also like when the stock market drops because then I can buy stuff that I like. So I always like the idea of a market dip because then I can go shopping for some stuff that I like. I have an approach on individual stocks of wanting to start selling some cash secured puts on some of the names that I like. I currently have a few stocks already long: CrowdStrike, Airbnb, Apple. Actually, Apple is just a free share that I got, actually. I was going to say, how did I get Apple? I haven't bought Apple. I have 0.01 shares of Apple, believe it or not. But yeah, Tesla, Nvidia, CrowdStrike, Airbnb. Market's dipping here a little bit this morning. U.S. stock market is opening up in the next few seconds here. Got 10 seconds to go. So let's just see how the U.S. stock market open looks here. And you'll usually see some volatility spiking around this time. You can see the market's already moving. And there is the first 15-minute candle on the 9:30 open. Thoughts on TLT? Yeah, I think TLT is a buy on a longer term basis. Personally, you do what you want. I could be dead wrong about that idea, but I think that the Fed's going to cut rates, and I think that a lot of the money market funds sitting on the sidelines. There's a lot of money. People may not know this. There is a huge amount of money that is parked on the sidelines because a lot of people have been parking their money in the last few years in high yield savings accounts, right? People have been parking their money here, and there's a lot of money that's been going into this. Why? Because the average guy, average girl who's out there not worried about this stuff 24/7 like the psychopaths that we are, they're just saying, I'm doing my business, and hey, my bank's offering me a pretty good high yield savings just to park my money there. I'm gonna do that. Here's the fascinating part that I think could lead to a rip higher in stocks and bonds and everything else. 6 trillion, that is T with a T, $6 trillion is sitting in money market funds, high yield savings accounts. There is a ton of money parked on the sidelines. Who's got this money? Boomers, millennials that have been sitting on, money. A lot of people have just money sitting in their bank. Now, why is this? Well, the market's been really scary the last few years, right? A lot of people have been really terrified by the pandemic, and then you had market crash in 2022 and Ukraine and Russia, a lot of people get very scared to invest their money. So they just go into something like this. And there's nothing wrong with that. If you don't want the smoke, if you don't want to worry about this stuff, then it's very normal for people to just put their money in high yield savings accounts, money market funds, and just sit on the sidelines and collect some interest. Okay, fine. Here is where things get interesting. So let's say right now you can get 5% in a money market fund. Ta-da, 5%, and I don't have to take any risk. That's amazing. But what if in a couple months, in a couple years, this goes to 3%? 3% and 5% offers are very, very different. Even the average person who doesn't have time to stare at this stuff all the time, right? We have to think about them because that's what's really moving the markets. Fundamentals are not something specific. Here's something I always point out with technicals versus fundamentals, right? Technical traders think technicals are all that matter. Well, that's only the traders of the world focusing on this. Do you know who focuses on fundamentals? Every human on planet Earth focuses on fundamentals. The grocery store is not something that a trader only has to focus on. Everybody focuses on their feeling at the gas pump, the feeling at the gas station, the grocery store, housing, right? Fundamentals is for everyone in the planet. Technicals is only for traders. This is why fundamentals are so important. These are the real forces that every human is contributing to. Technicals is like a tiny sub portion of humans that actually look at technical charts. So fundamentals are huge. So my point with saying that is that the average person who doesn't have all this time that we do to stare at charts and study the markets, they just see, 5%, that's pretty good. 3%, that's not good. Let me get into stocks. Let me get into bonds. Let me lock in some longer term duration bonds so I can keep collecting that 5%. Do you see where I'm going with this? This money, which has been parked in money market funds and sitting on the sidelines, you ready? The window is closing to get this. You're no longer going to be able to get that. If the Fed starts really cutting rates, high yield savings accounts are going to offer a lot less. And suddenly, money is going to go out of these things and into these things. Does the stock market rise on rate cuts? Not always. Rate cuts, and I've said this, I just want to keep saying this because it's really important. Do rate cuts mean stocks and gold? Does that mean they go up or does that mean they go down? The trick question is rate cuts don't determine that. The economy, the state of the economy when rate cuts begin, and when they are in the process of cutting rates, during a rate cut cycle, where the state of the economy is, that's what will decide whether these things go up or down. Rate cuts themselves do not tell you if stocks or gold are going up or down, okay? Here is the way to tell this. If you get rate cuts plus strong eco, then you get stocks are on top. Okay? Stocks kill it. Gold can do well because gold just wants to see rate cuts, but stocks are king. Gold does well. TLT does okay. But then the question is, rate cuts, again, rate cuts are not the determining factor here. The economy is. What about if we get a weak economy? What if we get labor data that comes in awful and we see the consumers start to dry up and start to, stay home and not go to the beach and not go to buy cars and not go to buy houses because they're hit by inflation? If you have a weak economy, stocks are absolutely not the place. Then you get more of a 2008 vibe, which is not what you want, right? You don't want to see a weak economy plus rate cuts because rate cuts then are just trying to save a weak economy, which just ends up with stocks getting killed. Gold flies. This is where gold and TLT become twin kings, right? It's like a dual kingship, maybe king and queen, right? I think gold is probably the queen and TLT would be the king. The king and queen would rule supreme there. You know why I say gold is the queen? Because I asked my audience at one point, I did this poll, is gold a male or a female? And it was like a resounding gold is the queen kind of thing. So I don't know. TLT bonds. I think of like bonds as like an old man. So it's like an old king. Anyways, I just want to put that out there because you hear this all over the. Let me. If you take one thing from today's stream, if you hear people saying rate cuts make stocks go up or rate cuts make stocks go down, then politely tell them to turn off their monitor, because that is not the case. That is there's been so many people spreading their bias. Rate cuts cause the market to crash. Rate cuts cause the market to pump. No, it doesn't. It doesn't do either one of those. Rate cuts are just a response to the state of the economy and inflation by the Federal Reserve. Where the economy and where inflation is, that's what matters, not the rate cuts. The rate cuts are a response. Are we all on the same page with that? Do we get that? Thumbs up if you agree, if that makes sense, if you get it. Let's take a look at some charts. So look at that. NASDAQ a little bit lower here, down 0.5% this morning. Not really any huge moves on the stock market front right now. Taking a look at gold. I am long gold here. A little bit of a bounce back this morning. I have a little bit of gold in the account, and I have a little, a good bit of SPY and Russell, which is not doing too hot today, down 0.9%.
So oil is interesting. It looks like we could start seeing some upside on oil. Now, we did see a pump to the upside yesterday with this candle. I was actually caught in this, which was quite unfortunate. I tried to short on a pullback, and then 3 minutes. It was 3 minutes after I entered the trade. This candle formed on some news out of Libya. So that was great. However, having said that, it's kind of been the cherry on top of the cake for me to start looking to go long. So we obviously have tensions in the Middle East. We also have some other factors that I can bring up here. So you can see the reason, despite mixed global demand, supply constraints from OPEC and resilient US production are expected to keep oil prices supported. The geopolitical environment adds to the potential upside risks for oil, so that's positive. Particularly with ongoing tensions that could disrupt the supply. Look for entries around $80 a barrel with potential upside towards $90 to $95 a barrel. Now, that's not me, that's come from bank reports, so that's not financial advice. So yeah, looking really for the long term at $90 a barrel, maybe an entry around this 0.5. So this is a 50% pullback of the previous move. So this leg to the upside. And this lines up quite nicely with some H4 market structure. We have also got the weekly time frame here. And we can see the weekly has just rejected this 200 moving average, which on the weekly time frame is quite significant. So you can see we've kind of been bouncing off this 200 for quite some time. I mean, granted, we've broken below. However, we've not held below for very long before coming back up. So from a technical aspect, it looks quite convincing, really. So I'm just waiting for price to come a little bit lower, tag into this fib level, and then, yeah, I'll be entering long. First target at the fib extension. So this would be sort of $82 a barrel, roughly. Okay. Hello, James. Look at silver and gold. Yes, we can look at silver and gold. I'm actually in gold. I'm not sure if I've just been... Okay, no. As I was in the back room waiting to come on, this candle was looking quite bearish. That wasn't very good in my favor. However, I got long on the resistance. It's very similar to Nick's trade. I think I have a slightly worse entry than Nick. Well, when I say worse, both trades have quite solid entries, but anyway, besides the point. Entered on this level of resistance, fib from low to high, as always. That's the entry method I take. As soon as we started seeing rejection of this level on, I think I took it on the 30-minute time frame. After a 30-minute candle closed bullish from here, I entered. Also rejected this 50 moving average on the H4. The RSI was oversold, so yeah, this was a no-brainer trade, really. all the economics and the macros towards gold are bullish. Price action's bullish. So yeah, really looking to take gold into new all-time highs. First target is 2,600. Target after that is 3,000. I don't have any hard levels, so I've not set take profits on here. It's more a case of monitoring how price reacts at these key levels, or these round levels, if you know, whatever you want to call them, these whole numbers, so 2,600, 3,000, etc., etc., and sort of just manage the trade by doing that and trailing the stop. So you can see my initial stop is at break even on the first position, and the second position has slightly over 1% risk, because I use 2% risk as standard. 1% risk is half, so I think I used a roughly 1.2% risk on this scaling. So at the moment I'm up. At the moment on this position I'm up, 2.4%. And this position's obviously break even. So for an outlook on gold, I remain bullish. Got an entry basically where price is now. So yeah, definitely wouldn't be looking to short. The only thing you really need to be careful of with gold is a profit-taking rally to the downside. Now this isn't uncommon. It's happened. Last time we made all-time highs right here. It happened last time here as well. So it's not something you should take lightly, because it can be quite aggressive. And if you're in a quite a leveraged trade with high risk, it could get quite nasty quite quickly. So yeah, just manage your risk if you are buying gold, because buying at all-time highs is never really ideal. However, in this specific situation, I think it's okay. If you outweigh the pros and cons for gold, the pros outweigh the cons heavily. Silver. Now, I don't know why I didn't take this. I'm not sure if I placed this in hindsight, or if I was wanting to take this and just didn't and forgot about it. I'm not sure. However, silver is the same as gold. I'm looking for some upside. However, I don't want to see a pullback, because that would likely lead a pullback on gold as well, and I don't want to have that happen. However, with an unbiased perspective, it wouldn't surprise me if we do see a pullback, just a very slight one, and then I could enter potentially roughly around here. Let's just see. Yeah, so we could get maybe a 50% pullback here. Stop loss at the previous low, so 28.8 roughly. And then we take it up to the previous highs at 32.19. That's the rough idea on silver. However, not really looking to get into silver because I'm already in gold. I don't really like adding on to other assets. I'd rather just scale into the one I'm in. Euro USD. Let's see. So, with the euro, I'm a little bit conflicted, or euro dollar, I should say. I think we are due a pullback. Now, that's not really based on anything concrete in terms of economics. It's more just looking at price action. I think we're very, very extended. You can see the daily RSI here is overbought. The weekly is also overbought. We're very, very deviated from the 200 daily moving average right here. So we are just under, slightly under 3% above the 200, which is quite a large amount for a Forex pair or a currency. So just based on that, we could see a reversion. However, the dollar is quite weak at the moment. The euro seems to be showing quite a lot of strength. The euro specifically, however, is stuck on this level of resistance. Yesterday's daily candle was bearish. Today's candle is not really showing much momentum either way. It's kind of flat, really. So yeah, we'll see. However, going back to the point of the dollar, it wouldn't shock me if we did see some strength in the dollar. Now, it's not driven by economics. It's not to say that, I really think anything's changed or the dollar needs to be higher. It's more a case of, as far as I've read and from, all the research I've done on the dollar, the 50 basis point cut is basically priced in. And that's from the way I see it, that's market participants preparing for the worst. So if you look on the CME tool, which I can pull up now, it seems like the majority is expecting a 25 basis point cut. So you can see 71.5% are expecting 25, and only 28.5 are expecting a 50 basis point cut. So if 50 is already fully priced in, or like mainly priced in, and we get 25, it may cause some short-term bullish moves on the dollar. But yeah, we'll see. Again, similar thing with the dollar. I think it's quite overextended at the moment. So I think just the nature of the markets, we are due some pullbacks on quite a few pairs.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.